Barry Ritholtz, good to see you here in Maine.
Great to be here.
What are the mistakes that investors repeatedly make when it comes to their own investments?
Well, they have a tendency to react to things as to be proactive. They're emotional and engage in all sorts of bad behaviors in reaction to those emotions, as opposed to being thoughtful and rational. And long term, they're basically just giving in to their gut reactions.
So what does that mean when you see the market behaving the way it is now?
Not a whole lot. I mean, when you look at a market that's range bound, I can't ever recall seeing a market within 3 or 4% of all-time highs and hearing people run around screaming like it's, there's a real tendency to obsess about every news release, every tick, every little movement in the market, when you go back and look at a long-term chart of markets and things like the Kennedy assassination and 1987 crash, they're barely visible on a long-term chart. The day-to-day little jinx and moves, it's not really that relevant or important to their long-term perspectives.
When you see certain stocks behave in a certain way, Apple, case in point, right? How much of what we're seeing is momentum moves, either upside, downside? It always seems like there's 10 or 20 stocks people fixate on in the market.
It depends on where we are in the cycle. Sometimes when you get late in the cycle and the market really narrows and less stocks are pulling the train, that becomes a really big concern, because what happens to those big stocks becomes really significant. On the other hand, Apple is an entity unto itself. It's fascinating to watch people trip over themselves to declare their latest offering a disaster. Go back and look at the reviews of the iPod, the iPhone, the iPad. This is terrible. Who needs one of these things? So we don't know the exact numbers on the iWatch, but apparently it was really substantial. We've actually seen regular watch sales drop last month because of the iWatch. I tend to give a company like Apple the benefit of the doubt, and the day-to-day moves, the up and down moves, it's more noise than anything else.
Anything else in the market, in particular a stock that's kind of catching your eye as, maybe people are going the wrong way on it?
I mean, no one wants to hear me bash gold anymore. We've been talking about how that trade broke 4 years ago, and the narrative that surrounds it is really kind of ended. The weak dollar and this Federal Reserve financial oppression is going to destroy currency and send gold to $5,000, or so we were told. And here we are with the dollar at a multi-year high and the Fed about to start normalizing rates. I don't even want to say raising rates, but bringing them back to a more normal, less emergency footing. So I think everything that needs to be said about gold has already been said. I will say that when we talked last year about Europe and emerging markets being cheaper than the United States, people really looked askance at that. If you're concerned about the valuation in the U.S., you should really be looking abroad.
Very good to talk to you, as always.
Thanks for having me.